are the team on some kind of hold period, or can they sell out anytime they want?
No, so the team on site and everything else like that, there's no escrow period or hold period or anything like that. They can sell out at any time.
Right.
With some of the board and management, some of the options there are escrowed, so they can't.
Right.
But the vast majority of people have that capability to buy and sell, and largely everyone are actually holders, and understanding the value proposition and everything else like that. They believe in what it is we're going out to achieve.
Right. So that's comforting. And what about, you talked about everyone's on board, have the same philosophy, same outlook on this.
Yeah.
Is there a business plan that you're working to? Because again, something you see in juniors they don't often do. Is there something that you've all agreed?
Yes, so we've obviously got the vision for the company is to maximise the value from the Century group of assets, whilst establishing ourselves in the industry as leaders in economic mine site rehabilitation.
Right.
So it's looking at how to go about rehabilitating mine sites in a manner that's economically viable and returns really, really good value to shareholders. Mm-hmm. And that unique value proposition and way of looking at the mining industry has actually helped us to attract people that are interested in doing things slightly differently and looking at it through another lens.
Okay, no, that's interesting. And so everyone is targeted to that mission?
Yes. Yeah.
Great.
Yeah.
So why don't we carry on, and why don't you tell us a little bit about the team then?
So from the on-site team, they're led by our new site senior executive, Craig Delaney. Mm-hmm. He's come on board with us from Evolution Mining. Mm-hmm. So when we were going out looking for a site senior executive to replace myself on site, we tended to look to Evolution, Northern Star, those sorts of companies, which in our view are some of the better managed companies on the ASX in that sort of small to mid cap space. And we wanted people who actually understood how to run mining companies from a sort of a lean outlook and making sure that things are done properly.
So run it like a junior compared to, I mean, again, so slight segue, the previous owners, MMG,
yes.
Why were they not able to run it the way that you were envisaging running the program?
I suppose realistically for MMG, their focus is not on the tailing side of things for starters. They're looking at big operations. They want to be, mid-tier to a large mining company. So they're looking for
an extremely large cap company. I mean, you create some real value there, not insignificant.
This is true. But I suppose that when they were analysing the project, a large portion of all the costs associated for them were indirect costs because they had a large corporate recharge. Because as mining companies grow, they tend to get quite large off-site requirements, and there's a lot more bureaucracy and requirements in order to run the company and do it the way that those companies are set up and structured to do so. Whereas we have a very, very small off-site function, if you will, so the costs associated off-site are not very high. Yeah.
Interesting.
From Craig, there's a team underneath him and all people who are experts in their field. So from our head of the processing plant and pipeline side of things, Adam Clark, who's ex-Glencore, Mine Isa Mines, who's got a wealth of experience in flotation plants and base metal operations, a metallurgist by trade originally. And underneath him, he has a very, very competent team of people that we've pulled from various different base metal operations in and around the Australasian region. People that are bringing that expertise from operating at various different operations into the team. So we've got very, very competent skill set in the area of the processing plant and the pipeline operations. That was also pulling people mostly based around in the Cairns, Far North Queensland region, where there is a lot of history in those type of operations. And also because we're doing things slightly different, those people are pretty keen to come and be a part of what we're doing.
Okay.
In the mining sense, we actually went out this, I suppose from a hydro mining point of view, there's not a large amount of expertise inside of Australia. It's not a mine method that's largely done in Australia. So we conducted a very in-depth due diligence process where we went and looked at the 5 largest hydro mining operations around the world, which took us to South America, South Africa, Mali, quite a few different locations, and we had essentially taken down our initial list of 7 potential contract partners down to 3 final contract partners that we would then go into business with. And that's why in the end we went with Paragon, so Tailings Operations, which is an offshoot, or it's a group that was set up by some guys that used to work for Fraser Alexander, which is one of the saltworks in the tailings reprocessing and hydromining world. And we partnered them with an Australian-based private-owned company, National Pump and Energy, who provided the capital infrastructure and the maintenance and the procurement and logistics function from an Australian basis. So we've really gone out and we've leveraged on the skill sets of various different groups to come and help us to execute what is the largest hydromining operation in Australia. So we've got a large amount of skill set there, and the vast majority of the people that are leading the hydromining operations themselves, they've got between 20 and 30 years experience in hydromining operations that they bring to what we're doing, and they've been training up the local Australian operators and getting them up to a world-class standard.
20, 30 years experience,
Yep.
they know what they're doing.
Yep.
How does someone like you target them with deliverables? How do you incentivize them to do better? Because you're talking about being a low-cost, lean operation, so you're the CEO. How do you manage that?
So the way that the actual contract with the hydromining companies is set up is where they get paid on a cost per tonne basis.
Right.
So they have a minimum set of tonnes that they need to get to cover their costs, and then everything above that is where they start to make really good money.
Right. Okay.
So it's a piece race contract. So they're hugely incentivized to deliver more tonnes on a more consistent basis.
Is that a standard process in the industry, or is that something that you've come up with?
It's a standard process where you normally have a scheduler rates contract. The beautiful thing on that is that you don't have cost blowouts, so it's not a cost plus contract or the likes of that, where you might have a misalignment of interest where the contractor actually doesn't mind if their costs blow out or anything like that, because essentially they make more revenue. In this basis, we have a very fixed cost per tonne of material that gets sent through the processing plant, and their interests are aligned with maximising production. So it is quite a standard way of doing it across the mining industry in general, and we just wanted to apply that so we knew what our cost per tonne was going to be.
Fantastic. And so, any additions lined up for this year? I mean, I think you're moving obviously from pre-production into a producer. Is the team going to be built up to reflect that, or have you got everyone you need?
So the team will be built upon from a projects and an expansion side of things.
Right.
So we're very close to and nearing our phase 1 ramp up, which we call the phase 1 ramp up, 8 million tonnes per annum throughput, and the recovery metrics that we're chasing up to 61% recovery overall.
Right. Where are you now?
At the moment, we're averaging sort of the high 40s, but we have had peak recoveries of up to 54%.
So that's a process of optimization, and how long does that process, that phase 1, last?
So the phase 1 will be up to where we want to be by midway through this calendar year. Okay. So we've only really been operating for 1 quarter. Yeah. And we're into our 2nd quarter of operations
fairly
now. Fairly normal, and you graph it against the majority of normal mining companies. Yeah, we're somewhere in the middle. Yep. As far as the recovery side of things, the industry standard that normally gets looked at is a McNulty curve, and we're well and truly beating the normal on that as far as getting your recoveries up to where they should be. So tracking along really, really well.